Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Yesterday, former Virgin Australia boss Jayne Hrdlicka was announced as the incoming CEO of Endeavour, the hospitality group that owns Dan Murphy's and BWS liquor stores, as well as hundreds of pubs around the country. Endeavour was spun out of Woolies in the middle of 2021 and has had a pretty challenging couple of years, in part due to cost of living pressures hitting retail sales. So will an experienced CEO like Jayne Hrdlicka be enough to turn it around? And what's it all mean for investors? Remember, this is general information only, and you should seek professional advice before making investment decisions. Johannes Faul is the Director of Equity Research ANZ at Morningstar. Johannes, welcome to Fear and Greed.
Thanks for having me on the show today, Sean.
What did you make of the announcement yesterday? Was it a surprise that Jayne Hrdlicka got the job?
Well, it was a surprise to me, for sure. And I think that now that Endeavour has appointed a new CEO, that removes that uncertainty that arguably some investors had thought is overhanging the stock by today's share price reaction, probably not as much as some people had thought. But that it removes that uncertainty of who's going to be the leader of this very large and the largest Australian retailer going forward.
What is the Endeavour story? So it was spun out in June 2021, I think. Its share price today is about 2/3 what it was when it first listed. Why has it performed so poorly?
So the share price is pretty tightly linked to what's happening with earnings. And Endeavour has two businesses that we probably have to talk about individually. And the bigger one is their liquor retailing business. Mm-hmm. So that's the brands that everybody knows. That's Dan Murphy's and BWS. Together, they dominate the Australian at-home liquor consumption. Around about half of all we drink at home, we have purchased at either Dan Murphy's or BWS. So it's the biggest Australian liquor business. It's huge. And what they've been experiencing after massive bonanza during COVID, when we were all locked up at home, is that all that demand actually unwound again when pubs reopened. So I know that's going far, far back to something we all want to forget, but that's important in the context of what's been happening. So we saw massive increase in at-home liquor consumption. Demand went through the roof. Sales went through the roof for all liquor retailers, including Endeavour. And then what we saw when the economy reopened and pubs reopened, that people wanted to go out again. And those demand volumes we saw initially stagnating and then actually dialing back again. Now we're back to what we believe is the long-term trend line. So all that hurt is behind us. That's the volumes. But then there's a second factor, and that's what are people drinking? What kind of alcohol volumes? And people are drinking cheaper options. And that's obviously hurting the top line, but it's also hurting margins. So that's happening in the retail business of Endeavour. What happened in hotels is almost a flip side, if you think. Going from the demerger or pre-demerger during COVID, the pubs did very poorly because they couldn't be frequented. And then with the reopening, they bounced back. So it's almost a mirror image what we saw with liquor retailing. So there's that natural hedge, if you like. Hotels is a smaller part of this group, though. So that's the past. And I'm sure we want to speak about the future, too.
We do. I mean, Jayne Hrdlicka, as a boss, she did A2 Milk, successful. Very successful, in fact, at A2 Milk. Virgin Australia, depends who you ask. Obviously, the airline is up and running. That's a good thing, though it didn't get a float away when she was CEO, and she isn't always the most popular among investors. What is it that she brings to the party for Endeavour that you think can help her put it on a trajectory where the share price actually turns around and starts going the other way?
That's a really good question. And I don't want to sound flimsy, but it almost doesn't matter too much. As I said earlier, Endeavour is a huge business. It's almost like a tanker. So it's heading one way. The problems the retailing business is having is industry-wide. So the second largest operator chain, Coles Liquor, has had a similar trajectory when you think about sales growth. So it's the macro, it's the aftermath of the pandemic, plus interest rate hikes, plus cost pressures or cost of living pressures for the consumers that's really impacting sales, not so much the strategic decisions by the previous management team. And I would expect that unless there's big sweeping changes, that this tanker, if you like, which is Endeavour, will continue its course. The question will be for Jayne Hrdlicka when she comes in early next year, early 2026, is strategically, where does she want to set nuances? How does she think about investing in the hotel segment that we just spoke, the smaller one? And how does she think about online? Things like that. Again, I would say they're nuanced. And circling back to your question, what does she bring to the table? She brings a raft of experience. She was on the Woolworths board for almost 6 years before Endeavour spun out. So she knows those businesses, in addition to leading two large and well-known Australian companies, Virgin Australia, the airline, and also A2 Milk's not an Australian business, the Kiwi business, pardon me, but two well-known businesses down here. So I would say, to me, this announcement is positive in the sense that it removes that uncertainty. In the sense, what does she uniquely bring to this business that's vital for Endeavour's future? I don't see at this stage much, but is it that important? I put a question mark on that.
Stay with me, Johannes. I want to take a look at the broader retail sector after the break. We'll be back in a minute. I'm speaking to Johannes Faul from Morningstar. Leaving Endeavour aside, you mentioned Coles Liquor a moment ago. What about Coles? What do you make of sort of the Coles Woolworths battle at the moment?
The ongoing battle, Coles versus
Never stops.
It never ends, does it? Coles and Woolies and also Endeavour, we just spoke about Endeavour, they're all what we would deem defensive stocks. And what's happening right now with global trade, we would say this is within retail land, the safest place to hide. We don't expect the tariffs that we've seen implemented or announced in the US and that going back and forth. Who knows where it's going to end? But that uncertainty is certainly there now. There is uncertainty in global trade. It's going to impact it. What the tariffs ultimately are going to be, nobody knows. But we would say that defensive stocks like Coles, like Woolworths, are very much a safer haven than anything that's discretionary cyclical.
Okay, so now I'm going to ask you about a discretionary stock, and perhaps the market leader in terms of discretionary is JB Hi-Fi. How do you think about JB Hi-Fi? Particularly, we could benefit from imports into Australia out of Asian economies, not going to the US. They could come to Australia. Maybe that benefits JB Hi-Fi. Maybe it gets hit by a bunch of tariff-related costs. I don't know how to think about JB Hi-Fi, and it is, as you say, it is not a defensive stock. It is definitely a discretionary stock.
Yes, that's a really interesting, I guess, backdrop, and the way we think through it. And I'm sure there's many other sensible approaches, but we thought long and hard about this and debated this, obviously, at Morningstar quite a bit. Impact of tariffs on all sectors, but also retailing. And the way we think about is that if there's less consumer electronics finding their way into the US, because there's less demand within the US generally, but also Chinese products will find it more difficult to compete in the US. There will be somewhat of a glut. What that glut's going to be is going to be dependent on how high are the tariffs, what's exempt, are iPhones exempt, like they are, and so forth. But there's going to be a glut somewhat of consumer products. That's our opinion. And what generally supply-demand curves mean is when there's an oversupply, it generally puts downward pressure on prices. And I'm talking about shelf prices for consumers. So that's really good news for consumers in Australia because we don't have any tariffs that are higher. So we'll get the benefits as consumers. For JB Hi-Fi, there's a few moving parts. One is their cost of goods will most likely drop if there's more supply. But also, is there going to be a lot more demand? And we're talking now the top line sales or revenue growth, if you like. And what we found over past cycles is generally when the top line growth is sluggish or soft and costs still inflate, that generally puts pressure on margins. So our take really for cyclical retailers like JB Hi-Fi is that if there is this glut that we expect, if there are lower prices, which we expect, and demand doesn't increase, it's not fully elastic and doesn't increase to offset all those lost sales that we expect, then it'll be a slight headwind for JB Hi-Fi and other consumer electronics retailers, but only for now.
It's going to be fun watching it. Johannes, thank you very much for talking to Fear and Greed.
Great. Thank you, Sean.
That was Johannes Faul, Director of Equity Research ANZ at Morningstar. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.